When I wrote the paper, quarter four last year, the general desire of the paper was to put our current sort of position of national debt in a sort of intergenerational context. But of course, things have got very interesting over the last 6 months since the paper was written. For a while, in January and February, a third of all government bonds in Europe were trading with a negative interest rate. Just let that sink in. You were paying government to lend to government in much of the euro area. We had a very dull election campaign in terms of fiscal policy. All the parties agreed that they would aim for a balanced budget in 5 years' time, but none of them gave any detail about how they planned to do it. So the Conservatives said something about 12 billion on welfare. That was the only detail, I think, any of the main parties gave, because of course they were treating the electorate like infants, too scared to say whose taxes were going to have to go up, whose spending was going to get cut. And I'm afraid it looks as though the headlines today, we are definitely in the last week, the last chance saloon for Greece to do a deal, or to either default on its debt or restructure and come out of the euro. So that is sort of headlines today. That's why if you're in the financial markets, equity markets have fallen. So what I'm going to try and do, go through the paper a little bit and expand on it in one or two areas. I'll give you a sort of little bit of a history, particularly of the UK public debt. I can talk about the US, euro area, Japan, if you want to get me onto those things. A little bit about how economists generally think about why public debt is not necessarily a bad thing, and then go on to some of the dangers, how we've got here, the sort of intergenerational problem with who I call the prodigal stewards, the baby boomer generation, once they got their hands on the reins of power, have given up the idea that they should pay off the national debt. And then just quickly talk about some of the dangers, and then the biblical material about debt and government and how that might apply to the UK, how we might change things in the light of that. I'll perhaps comment a little bit about what Mr. Osborne said a few days ago. So essentially this has become such a big issue because we've lived through the global financial crisis 2007 to 9, and we're still living with the consequences of that, the ripples of that. Governments initially borrowed at that time as if they were fighting a war. So it was effectively the first time deficits, not just in the UK but the US and so on, went so high in peacetime. At one point, the United States government was borrowing 40% of everything it spent in 2009. The UK, just under a quarter of all the UK government was spending, was being borrowed. And that had arisen because, of course, in the run-up to the crisis, governments had been mistaken that their fiscal position, their tax receipts were much more healthy than they actually were. As a result, when the banking crisis came, recession came, tax receipts collapsed, and governments felt they had to carry on spending in order to keep aggregate demand up. And so governments became borrowers of last resort. Now we're sort of living 5 years, 6 years after that time. Interest rates are very close to zero. There's been vast monetary stimulus. The Bank of England is sitting on still almost a quarter of the gilts in issue, and of course is recycling the interest on those back to the Treasury. But we're still running in the UK a deficit of over 5% of the economy, whilst unemployment is very low. And so, in economist terms, cyclically, this is as pretty good as it gets, but we're still running a very big surplus. So sorry, a very big deficit. Just as the demographic pressures on healthcare and pensions start kicking in. So as the birth rate dropped in the late 60s, early 70s, people are living longer, so you've got far more older people coming through for support from a much smaller workforce. The problem is that if you do the government accounts on what you call an intergenerational basis, we are loading masses of debt onto people who are below 35. So just one of the sort of stark things I'm going to say is that Martin Wheel, who's on the Bank of England Monetary Policy Committee, calculated what the intergenerationally just surplus would be now if you were going to equalise the tax burden across generations. And in 2010 he calculated that the government then was in deficit of 9% of the economy. If you were going to equalise the burden across generations, it should have been running a surplus of 3 to 4% of the economy. So at that point, the government was running a budget that was about 15% of the economy too loose. That has come down, but would be roughly about 10% too loose now if you were going to equalise the burden of pensions and healthcare across generations. So Mr. Osborne and whoever the Labour Party Shadow Chancellor will be, will duke it out at the budget about the odd billion here and there, and should we borrow some 10 billion here or whatever. On that intergenerationally just basis, they should be spending less or taxing more to the order of 150 to 200 billion pounds more. So that just puts it into context. Very quickly, where is the UK? What happened in the crisis? Running up just before the crisis hit, famously Gordon Brown was running a 3% deficit of the economy in good times. That then rose, as I said, the highest peacetime deficit, over 10% of the economy in 2009, and it's come down slowly to about 5.5% at the moment. Gross debt of the government effectively doubled over that period as a share or relative to the size of the UK economy, GDP. But in another sense, if you were thinking about how creditworthy is the government as a borrower, one of the metrics you'd use would be how many years of income would it take to pay off the whole debt. And that has more than doubled since 2007. Now, of course, many economists would say not really a problem, because we've had debt relative to the economy much, much bigger in the past. So this is the sort of standard chart you'd have. This is public debt over the last 300 years, going back to when the UK started borrowing as a country, as a government, in just at the end of the 17th century. And so it peaks actually just after the Napoleonic Wars, comes right the way down during the 19th century as many chancellors are trying to pay back that wartime debt, and then spikes again at the First World War, Second World War, and so you then have those two more spikes upwards, and then since then, in the second half of the 20th century, came down heavily to at the bottom of just at the end of Mrs. Thatcher's government, where famously she declared the desire to pay off the national debt, and then 2 years later the government was in huge deficit because there was an issue around the recession that hadn't been foregone. So of course, in that context, this debt burden is historically not very unusual. The UK's lived with it in the past. There are all sorts of reasons why it's much more difficult to live with a high debt burden now that you didn't have it in Napoleonic times or after the First and Second World War. I can talk about those later. But just to put it in context, over the last few years, this is what has happened in the last, effectively, 45 years. In the 1970s, high inflation inflated away the real burden of that debt, comes down to a low and about 25% of GDP in 1990, and then rises precipitously. But in the paper, I sort of try and shake things up a bit by giving you this chart, which is just what is the real debt per person over that 300-year period. Now, of course, we're richer now, and so you could say we can afford it. The opposite point is, if we're so richer, why do we need to be in this debt? That just shows that the real per person debt now is much higher than even at the end of the Second World War. Now, the worrying thing, of course, is that is just what's on the balance sheet that government publishes. I'm afraid that is the tip of the iceberg as to what the government has actually promised to people. Now we call these contingent liabilities because they're not legally enforceable necessarily. Governments might change their mind about what they owe. And so the big ones are at the top. The biggest is, of course, the unfunded pension commitments to civil servants, to teachers, to police, but also the state pension fund that isn't funded. There are no savings put aside to pay the state pension. And the bad news, if you're a UK taxpayer, is that the National Audit Office calculated this at around £5.5 trillion in 2012 if you use quite optimistic discount rates and assumptions about how long people are going to live. If they were a bit more realistic, you'd be looking at £6.5 trillion. So on balance sheet, the UK's debt is about £1.5 trillion. Off balance sheet commitments just on pensions are about 3 to 4 times bigger than that. Now, of course, you could say government doesn't have to pay those things. It could renege on its pension commitments. The slight problem is, as we've seen in the last election cycle, those commitments to pensioners are becoming firmer and firmer as electoral cycles go on because, as we know, older people vote, young people don't. To make sure you get elected, you have to give these promises to make sure pensions aren't reneged on. And so we have the famous triple lock in legislation on the state pension. So a government to renege on that would have to start unpicking lots of law that its predecessors have committed to, and would then lose the next election in the process. Unfortunately, that's not the only thing, of course, that government has implicitly or explicitly guaranteed. And I've got some of the explicit or implicit ones there. Nuclear cleanup costs, that's probably going to be 100 billion over the lifetime of Sizewell and Sellafield. About 200 billion of public-private partnership receivables that government has guaranteed. Lots of public corporations, particularly Export Credit Guarantee Department, ECGD. In looking up this, I realised that the Treasury had sneaked through a doubling of the credit commitment guarantees to subsidise exports from 25 to 50 billion. I hadn't seen anyone publicise that. Just to note, you'll be happy to know that you, the UK taxpayer, are subsidising Emirates Airways to buy Airbus aircraft with an Islamic bond. That's some of the things you're guaranteeing. Then we come on to explicit guarantees for the Bank of England. If it loses money on all those gilt purchases, if interest rates ever do go up, the Treasury has to guarantee the losses there. And then there's all sorts of unfunded insurance liabilities that the taxpayer is on the hook for. There are £2 trillion of UK bank deposits. Effectively, they are guaranteed by the government. There is no money or very little in the deposit insurance fund. So effectively, £2 trillion is guaranteed on there. But of course, we're guaranteeing flood insurance, commercial property terrorism insurance, and Help to Buy too. So of course, the Chancellor agreed to underwrite the riskiest mortgages for the UK taxpayer to guarantee if there were defaults. So you've got not just those likely liabilities, those unfunded pension liabilities, but all sorts of guarantees and so on that have been committed to. What's the conventional wisdom for why we do this? And there are three traditional reasons, and one that has just become popular all of a sudden. The three traditional ones are government debt allows generations to share burdens of shocks, particularly wars. And so as you saw from the last 300 years of the UK public debt, the debt goes up when a war has been fought, and then subsequent generations pay it down or get it inflated away. There's a sort of true Keynesian reason, which is sort of deficit financing in a recession, trying to keep demand up when the private sector is worried about investment prospects. And so essentially this is what happened in 2009. Government kept spending up and borrowed because the private sector wasn't going to. It can be argued that government investment can produce returns greater than the cost of government borrowing. So sometimes that's very specific in terms of electricity power grid or whatever. Sometimes it's claimed that that's the case for education. So if that's the case, why isn't the government borrowing to invest to get a higher return? But then the one that sort of has come into fashion, and the IMF peddled this last week, saying the UK didn't need to pay down its debt very much, is effectively that because the private sector now has so much debt, the worry is that if government starts reducing its borrowing, there will be a sort of recession, that the private sector won't borrow enough to keep demand up. So government still has to carry on borrowing because there's a fear of under-borrowing from the private sector. However, to me, there are, as an economist, there are sort of pragmatic short-term reasons for some of those things. But in the context of the intergenerational issue, they're relatively short-term. And what I try and highlight in the paper is we've got a much bigger intergenerational justice problem, of which the public debt is the sort of visible consequence. And so I'd say that we've got a very strange dichotomy at the moment between how we think about the public debt and how we think about climate change. Climate change and addressing that is incurring very high current costs for distant benefits on the assumption that future generations need to be protected from the consequences. And the implied discount rates that you have to use to make that worthwhile are very, very low, if not negative. That is, you're weighting the future much more heavily than the current generation. So famously, the Treasury's report on this, the Stern report in 2006, used a very low discount rate to get anywhere near cost-benefit break-even for incurring costs on climate change. But we don't do that when we're thinking about public debt. So if we were to use those same discount rates we would be thinking we'd have to be in big surplus now because future generations should not be saddled with the debt we would otherwise give to them. So there is a big inconsistency in how we're thinking about future generations across the two topics. Unfortunately, that's then been exacerbated by much of the debt was incurred when we overestimated future incomes. So if you go back to the middle of the last decade, it was assumed that the UK economy would grow at 2.5% to 3% effectively forever. Debt could be accumulated and we grow our way out of it. However, it's now become apparent that growth in the economy is turning out much lower than had been anticipated 10 years ago. So this isn't just a UK issue, this is Europe and the US as well. There seems to be something about aging populations are reducing productivity growth, and so incomes are going to be much lower than had been anticipated even 10 years ago. So productivity growth seems to be coming down to as low as 0.5%, maybe 1% a year at the moment. Now, of course, we could have a big breakthrough technologically. There could be something that transforms things on the energy front in particular. But without that, we're looking at a much lower growth of incomes going forward, and therefore that means that future generations will be much less able to bear the burden that is being placed on them. I'd say we've got over-borrowing at the moment to maintain consumption and government spending. We're effectively viewing government as if it was a provider of consumer services. So politicians seem to view the electorate as consumers of government services. They like services but don't like paying for them. And so this rationale seems to have invaded our politics. Now the slight problem is that we're doing so at a time when we're undermining the social capital that will make it less if needed for government to support the care burden going forward. So the last 50 years we've had an erosion of social capital through high divorce rates, social mobility, locational mobility, so that communities are fragmented, extended families are broken up spatially, and so can't provide the care for older people that would otherwise be able to do, and so then the burden transfers to government. So I'd say that we've effectively got an intergenerational crisis brewing with the young inheriting both high public debts. They are required now to take on high debts for tertiary education. They have to save for 10 years now for a down payment on a house to buy a very expensive house. But their pension and healthcare expectations are coming down all the time, partly because interest rates are very low, so to get the same pension income in the future you've got to save a lot more, because interest rates are 2 or 3% rather than 5 or 6%. But also because interest rates are low, house prices are very high, because we're saving so much in order to meet these pension commitments. So I believe we've got this sort of slow burn problem of a big burden being placed on younger people. The surprise is we haven't yet really had a revolt of the young against the old. I suspect the first inklings of it will be deliberate default on student debt, and that will become something of a populist movement among the young. But the prospect is of being born, certainly in the US at the moment, you're likely to be born into debt servitude for most of your working life. Of course, these high debts lead to various potential dangers. I won't go through these in great detail, But of course, if the government has a high debt in terms of pound sterling, it's quite keen or quite ready to accommodate inflation. It's no surprise that the UK price level has risen effectively 100 times in the last 100 years. One of the reasons for that is government is the largest debtor, and so is quite happy with the help of the central bank to accommodate a higher price level. It gets it out of its debts. There's a potential for a very vicious, nasty, vicious circle between high debts and high taxes. You're seeing this at the moment in Detroit. One of the reasons why Detroit defaulted on its debts 2 years ago and declared bankruptcy was that it was accumulating high debts. Taxes had to go up. All the wealthier people in Detroit moved to the outskirts, moved to the suburbs outside to avoid the debts and the taxes. There's a similar problem going on between California and Texas at the moment. Chicago may well be the next city that declares that type of bankruptcy because it has underfunded its pension commitments going forward. There's a loss of national sovereignty if a government's debts are heavily held outside the country. And the government is always at risk of a loss of liquidity, loss of confidence if its liquidity or solvency comes into question. So at the moment, we're looking at a big issue for Greece. Nobody is willingly lending to Greece at the moment because its solvency going forward is just under complete question mark. Its debts need to come way, way down before anyone external will then have the confidence to invest in Greece and not worry about confiscation. It may surprise you, but there's no mechanism for governments to reduce their debts through bankruptcy. Not internationally, not domestically. So governments can pass laws that effectively change property rights on their bonds under domestic law, but if they're issued in foreign currency under another legal system, it's very, very difficult to come to an arrangement whereby you can agree with creditors that they're going to reduce their claims. So Argentina is still fighting with its creditors 14 years after it defaulted in 2001. But one of the biggest problems is that effectively the banks in a major economy and the government are conjoined twins. The banks, because they hold so little capital relative to their risks, to their balance sheets, but also hold a lot of government debt often with no capital against it. Government debt is zero risk weighted. So you've got a problem that if governments fail, often they'll bring their banking system down. If banks fail, governments will be in serious trouble because they've got to guarantee their banks, as happened in Ireland in 2009. You have these problems of effectively the banking debt becomes the government's debt in a crisis. So, we've got all these potential dangers, we've got this looming crisis. What might the Bible say in terms of its wisdom on debt that may help us with these issues? Well, the first thing to say is the biblical wisdom on debt can't easily be applied to governments because government debt is about as far away as it can get from lending and borrowing envisaged in Scripture. So one of the things we often emphasize, and Jim emphasizes, is the relational context within the whole of the Old Testament law in particular. And so creditor and debtor, part of the backdrop is the relationship between the two. How can they work their problems out if problems arise amicably? The trouble is that government debt is unrelational. anti-relational. For instance, you, the lender, if you're buying a government bond, you don't know what your money is going to fund. It's any part of government spending that isn't met by taxes. So you've got no sort of control over what your money is going to. You've got no knowledge. But as we've said, the government is a sort of corporate entity that is borrowing and can't negotiate with the lenders if it gets into trouble. So its reputation is on the line if it defaults, but there's no mechanism there's no sort of, in domestic law, there's no bondholder group of gilt holders in the UK context that you could negotiate with. And so there's a real problem in this sense, in that there isn't really a relationship between government and its lenders. It's difficult to come up with that. So in a sense, we're straining the sort of biblical backdrop to apply this to government debt. These are some of the things that you can emphasize thinking about biblical wisdom on debt. First, debts are promises to be honoured. This is where economists often misunderstand the public mood. Economists often say public debt doesn't matter because we owe it to ourselves, and don't realise that effectively there is a promise being made by a government on behalf of taxpayers to creditors. And so hard-nosed economists might say, oh, restructure the debt or inflate it away or whatever, or carry on borrowing, it doesn't matter if your debts explode. But then don't realise that debts are promises, that if you don't honour those promises, then particularly honour the promises of government, then that starts eroding the sort of economic fabric of contracts within an economy. Then we forget that debt, in biblical terms, entails financial bondage because it is such an important promise. So, Scripture, particularly Proverbs 22:7, talks about those in debt being effectively in bondage. They have given their bond, their promise, therefore they are no longer free. And so in a sense, if we as taxpayers collectively have still got a debt, we've made this promise to our creditors, and we can't become free. Difficult to do so. In scriptural terms, debt is ideally cancelled periodically. This is effectively to prevent debt servitude being prolonged. And so you get the idea of periodic debt cancellation. But of course the UK has been effectively in debt for 300 years. Only recently is debts from 1744 have been called and repaid. So 250-year debts have been outstanding from the UK for that long. So there's, in a sense, you don't get with government debt this idea of a clean slate being wiped out. And then, of course, this idea that charging interest is inherently unneighbourly, it's unloving. It's not what those within the same community do to one another. Again, very difficult to apply in a government context because effectively current taxpayers are committing to pay interest to creditors. They don't know, they've made promises to pay that interest. Biblical wisdom for government, central government power and prerogatives should be limited. You get this idea from both Deuteronomy 17 and then Samuel talks about this in Samuel chapter 8 when he warns about the danger of tyranny from having a king in Israel. Central government will enslave, will tax, and so on. However, the New Testament idea is that government is appointed effectively as God's image to punish evil and promote the good. And so in a sense, government in the civil sphere needs to be imaging God in terms of what it's meant to be, the moral law that it's meant to be promoting. God's covenants span generations. His time frame is intergenerational. And you get this running theme of stewardship, that God's call to mankind is not self-aggrandizement, use all the resources now. It is to preserve, to steward, to develop for future generations. And then finally, when thinking about the future, we need to be thinking contingently. That is, we shouldn't commit absolutely as though we know what the future holds. Only God knows the future, and in our financial dealings, we should be much more circumspect, because we don't know what tomorrow brings. So some of the things I've suggested in the paper would be trying to take some of those ideas and address this intergenerational justice issue. So I've suggested, in a little bit differently from Mr. Osborne a few days ago, a sort of intergenerational covenant to try and think about how is one generation passing on as good a capital stock, as lower debt, and so on to the next generation. And so commit to improving the inheritance of what you're passing on from one generation to another. Now that can then be expressed in terms of both public debt, but also the capacity to finance it. So if, for instance, you have a very young population that's growing fast, very productive and so on, then it's less of an issue to get for the current generation to save a lot now, because the future will be doing much better. Problem is that as we're in reverse, it means that now the emphasis or the sort of need for the current generation of taxpayers is to save more, to reduce the burden for the future. We need to be a lot more transparent about how we account for all those other liabilities that we're funding and accruing. So the emphasis in all the Treasury documents is on the debt that we've accumulated that is on balance sheet. It's very, very hard to get the data about all those unfunded liabilities. And all the contingent liabilities, all the insurance contracts that you, the taxpayer, are writing are virtually not published by the Treasury. It's very hard to get data on those. So we should be, to address this intergenerational covenant issue, we should be insisting that those liabilities, as they are accruing, get accounted for, so that we know what we're leaving for future generations in terms of the promises we're making. And one idea, moving on to the next point, is to start thinking about non-debt ways of financing government's capital stock, finding some way of non-debt financing for tertiary education for students, but then to remove the tax subsidies that debt across the piece in our society enjoys. One of the reasons Mr. Osborne gave for why he wanted to enshrine this idea of a perpetual surplus was in case there was another financial crisis, that government was on the hook then to help out the banks again. However, we haven't really addressed that problem from the last crisis. We've still got banks that are too big to fail. We still privilege debt both on bank balance sheets and for companies. The Economist a few weeks ago calculated that the tax subsidy given to debt in the UK economy in 2007 was around £50 billion a year. If you remove that and make the economy more stable, not just improve the government's finances now, but you remove that need for bailing the system out or reduce it significantly. So to conclude, I'm going to maintain that high levels of debt leave governments vulnerable to default or restructuring or the temptation to inflation, which is another form of sort of tax or undeclared theft. The overarching issue, we can debate the pros and cons of should we run a higher or lower deficit now, but we're missing the big question, which is the one about intergenerational justice. And we can reform our fiscal rules. The budget in a few weeks' time is going to propose a rule that will enshrine the greater likelihood of running surpluses in parliaments to come. But, of course, each Chancellor, we found, passes fiscal rules, and the next one undoes them again when it suits. We don't just need laws to tie our hands, laws that can be unmade very easily. We need a change of societal heart. And I'm afraid we haven't got there yet. It seems to me that those in power aren't understanding yet the burden they are placing on the young. So I'm happy to answer questions.